And then get them on the way.
Thank you, Mr. Chairman. Chairman Bernanke, the district I represent has somewhere between 1,500 and 2,000 factories. It's highly industrialized. And the Institute for Supply Management is up now above 50 for the seventh month in a row. As I talk to my manufacturers, it's the same choke point. I talked to the regulators. They say that the regulatory standards have not been tightened. I talked to the banks. The banks say they can't lend because of the regulators. If we want to create jobs, as stated in NAM's new study with the Milken Institute, John Engler, the president of NAM, said the new report makes a powerful case that manufacturing can lead the U.S. into a renewed era of growth. It's critical that we accelerate our economic recovery and create jobs for the benefit of manufacturers. I have manufacturers that are ready, willing, and able to hire employees. They have orders, substantial orders. They can't get capital in order to make their new product, and in some cases, the buyers are going overseas to buy the product. I mean, we have a choke point in credit. It's super crisis. These are existing borrowers. There are people with very, very low debt to equity ratio. They are prime borrowers. Many in the food processing industry, which has seen an uptick in this economy, begging for credit. And they come to me and say, why has the government created more and more programs out there when all we need is a simple operating loan or equipment loan as we had before? I mean, what is the answer? What can I tell them? Besides, we've invited you to come out to our district, talk to them personally and individually, perhaps help the banks out.
Well, part of the issue here is, of course, there's more than one regulator. And if next time, please ask who the regulator is. If it's Federal Reserve, I'd like to hear from you, and I'll be happy to talk to you about it. We at the Federal Reserve we understand that, and we should all understand, we don't want banks to make bad loans. If a borrower is not financially able to manage the loan, we don't want them to make that loan. But you're talking about situations where you say that the borrower is creditworthy. In that situation, we want the bank to make the loan. I've answered to a number of questions about steps we've taken to gather more information, to have meetings, and to train our examiners to focus on this exact point. So we are very, very focused on trying to keep that appropriate balance.
I know you are, Chairman. The problem is that it's simply not getting through. And it's not your fault, and I don't think it's the fault of the regulators either, because everybody is skittish because of the economy. But the problem is we're at the beginning of a real recovery. Not make up jobs through the dumb stimulus bill, not creating government jobs, but the creation of real jobs of people in manufacturing going back to work and exporting. And many of these are highly paid union jobs. They just can't get the money, and they're creditworthy. I mean, it doesn't make sense for us to have all this debt, all these programs, people ready to go, they're creditworthy, but they can't get the money in order to make the product to create the jobs.
I'd be happy to hear more details, and I'd try to figure out what's going on, because we are working very hard to make sure that's not the case in banks that we supervise.
Is it possible, Chairman, that you could meet personally with some of these people?
Certainly.
I'll take you up on that. Thank you, sir.